now. To discuss more on this entire space, I'd like to welcome in Jeff Pierce, the Senior Manager of Derivatives Trading for Charles Schwab. So Jeff, we'll start off with Palantir making a near 12% move to the upside today, still off of highs by about 10%, but nice green candle today. And I know we're rallying the overall market, but not to the extent that Palantir is.
No, absolutely not. I mean, we're seeing this move off a really incredible earnings report. Total revenue up 27% year over year, $653 million. Commercial revenue up 33% above analyst expectations. They saw about 55% year over year growth in U.S. commercial revenue. If you look at the government side of it, that revenue was up 23% year over year. And finally, customer count, I think this was a huge win for the company. That grew 41% year over year. On the U.S. commercial customer count, they saw that up 83%, coming in at 295 customers. Outlook-wise, they've raised that again for the second time this year. Full year, they now expect revenue between 2.74 and 2.75 billion. And we're starting to see analysts weigh in as well. Just a lot of positive commentary around these results. Citi kept a neutral rating but moved their price target to $28. C.A. Davidson also raised the price target to 28 from 24, kept a neutral rating on the shares. So a lot of good stuff coming out of this report, and I think investors are seeing some positive numbers for the full year, which is important for this particular category.
Just when you thought the stock market had settled into its usual rhythm, a storm named Nvidia has stirred things up, making headlines and grabbing investor attention worldwide. The company, helmed by CEO Jensen Huang, has not only maintained its lead in the tech industry, but has also catapulted itself to unparalleled heights, momentarily touching a market valuation of an astonishing $3.3 trillion. With such a sky-high ascent, it's no wonder Nvidia has drawn the gaze of regulatory bodies from the European Union, Britain, and China. From its sale of AI GPUs to rumors of questionable data scraping tactics, Nvidia's tale is one of triumph, controversy, and relentless innovation. The unstoppable force in AI Nvidia is undeniably a powerhouse in the AI realm. Founded in 1993, the company has specialized in creating cutting-edge graphics processing units. But it's in the last few years that Nvidia has truly revolutionized the tech industry. By developing the best hardware for training AI models, the company has surged ahead, leaving competitors in the dust. More than just a tech company, Nvidia symbolizes the nexus of innovation and market dominance, an electric combination drawing both awe and skepticism. But recently, Nvidia's capability in maintaining the same robust level of success has been put under question. But what happened exactly, and how might it affect Nvidia's future? This is what we will go through in today's video, so please don't miss out. But before we do that, if you want to keep up with the latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. That said, back to today's video.
While 90% of analysts say to buy this stock, even with this pullback, there's at least one doubter on the street in the names of Elliott Management, which had a letter that kind of leaked out. What did we find out in this report from the Financial Times?
Yeah, somebody's going to be, the one saying no to the stock, right, that keeps winning. And that's what Elliott Management is doing here. They talked about a potential bubble for the stock. They said the AI technology driving the chip makers' share price is overhyped. They said they were skeptical that big tech companies would keep buying the chip makers' graphics processing units in such high volumes, and that AI is overhyped with many applications not ready for prime time. They did say that many of AI's supposed uses are never going to be cost efficient as well, and they're never going to actually work right, and will take up too much energy. That's an interesting side of the story. I mean, it's hard to see that when you look at these earnings reports, when you look at the type of purchases we're seeing on Nvidia products. Just that last report alone, data center revenue up 427%. 86% of their total revenue. This has been an absolute impressive stock for quite some time. I know we've seen that pull back for the overall sector, but it's an interesting take for sure.
Any conversation about Nvidia must begin with its staggering valuation. At one point, Nvidia reached an eye-popping market value of $3.3 trillion, briefly becoming the most valuable publicly traded company on the planet. This meteoric rise was largely fueled by the insatiable demand for AI technologies, with Nvidia's GPUs standing as the gold standard for training complex AI models. However, rapid ascensions often attract scrutiny, and Nvidia is no exception. Their soaring success has led to a flurry of regulatory examinations, coming from not just one, but multiple corners of the globe. Regulatory scrutiny, a blessing or a curse? In recent times, Nvidia has found itself under the microscope of authorities from the European Union, Britain, and China. These regulators are particularly interested in the company's sales of AI chips, its supply chain allocations, and investments in other firms. To add more fuel to the fire, the U.S. Justice Department has launched a comprehensive investigation into Nvidia's sales practices and a recent acquisition that remains shrouded in secrecy. Progressive groups in the U.S., alongside Democratic Senator Elizabeth Warren, have made a vociferous call for additional scrutiny, citing competition concerns. Regulators need not be concerned, as we scrupulously adhere to all laws and ensure that Nvidia is openly available in every cloud and on-prem for every enterprise, Nvidia spokespersons have asserted, attempting to calm the regulatory storm. Despite these reassurances, it appears that the law may need a bit more convincing. To tackle these challenges head-on, Nvidia has been expanding its footprint in Washington, diligently building new offices and hiring essential staff, including a competition attorney slated to join in 2024. This move underscores the company's recognition of the gravity of current regulatory interest. Furthermore, Nvidia is putting together a robust strategy to respond in an efficient and legally sound manner to any potential antitrust queries, especially since the company commands a whopping 80% market share in the AI chip sector. But that's not all of it. So let's keep rolling. Hello everyone and welcome back to Investocracy.
So some thoughts on Nvidia, because people had the stock split and they got excited. It was at 120, went up to 140, and now it's barely holding 100 here. I think it's at 102 or something today. Tell me about Nvidia. Where do you think it's headed, and how would you look at this one?
Absolutely. I think it's important to talk NVIDIA due to its large mega cap and exposure that it has to the market. But we've had earnings so far, and the hyperscalers have told us that they're, again, increasing their CapEx spending. And who does that benefit? That naturally benefits NVIDIA. All AI points back to NVIDIA, at least in this early stages that we are. There's concerns with the Blackwell chips delays that were announced yesterday, but there's definitely stock gaps that NVIDIA has put in place. There's even demand for their Hopper chip. But what's important about this NVIDIA issue that we're assessing, especially with Blackwell, that's a supply side issue, not a demand. There's back orders that will eventually normalize. So I think that's very important to pay attention to. And also, out of all of the trades that I'm providing you today, Nicole, when there is downturn and there's volatility from an options perspective, that heightens premiums. That is such a dream for an options trader. And yesterday had one of the best trades that I've seen on NVIDIA, and adding it to your longer term portfolio. NVIDIA is a stock I absolutely would own. Don't trade because of the high beta that it is. But yesterday, or even earlier today, if you sell an at the money cash secured put, that's about 45 days out, putting us in the September 20th expiration. At the money be around 100. You could collect $10 worth of premium within 45 days. That's 10% of premium that I would make, giving myself a $20 spread of profit potential. Right. That's a rare opportunity.
Yeah. Nvidia has recently been embroiled in controversy over allegedly scraping millions of YouTube videos to train its AI models. A bombshell report from 404 Media has suggested that Nvidia employees were internally directed to scrape content from YouTube, Netflix, and other platforms that explicitly prohibit such activities. These allegations have cast a shadow over the company's otherwise stellar reputation. In their defense, Nvidia maintains that all datasets used for training its AI models are in full compliance with copyright laws, according to a company statement. However, the finer details of these datasets and the specific legal interpretations of what constitutes full compliance remain murky. It seems Nvidia will have to navigate this legal labyrinth with utmost precision to maintain its industry stronghold. The market's reaction. The stock market, ever the emotional roller coaster, has reacted to these developments in a rather predictable manner. Shares of Nvidia have seen fluctuations as investors weigh the incredible growth against the potential regulatory and legal pitfalls. After touching a market value of $3.3 trillion, the stock experienced a correction, albeit maintaining a solid standing in the market. Investors have every reason to keep their eyes glued to Nvidia. The company's core business model, built on providing top-notch AI hardware, remains remarkably robust. For every regulatory hurdle and legal quagmire, there's an underlying story of unyielding innovation and superior market positioning. Savvy investors may well ask themselves, is this dip in Nvidia's stock an opportunity to buy? Preparing for the future. Looking ahead, Nvidia shows no signs of slowing down. Industry forecasts predict continued growth, driven by the unrelenting demand for AI solutions across various sectors. The company's proactive steps, from hiring legal experts to building new offices for regulatory engagements, indicate a long-term vision that transcends immediate hurdles. So how should you react as an Nvidia stock investor? Let's answer this. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Some of your thoughts, Kevin Green, on the chart, please.
Yeah, you can see some of the optimism that Jessica has as of this moment here. I mean, we had a little bit of a pullback, but the primary trend is still bullish. So when you're looking at a one-year daily chart, you can see that obviously the uptrend that we've seen in the market, and now having a little bit of a pullback. Now, you could actually say that this is potentially a flag formation that is forming out here for the stock, maybe a little bit of a consolidation or a pullback period. But we are trying to really retest that lower channel line, and that's just one thing that I wanted to really highlight. We broke through. Obviously, we had some macroeconomic pressures, tested a key area of support at around $90, and now we're trying to move back to the upside. Now, reclaiming that trend line will be key here, Nicole. If we actually do see a failure, we could also see the 200-day SMA being the first critical area of support at around $81.14, and then below that, $75. Now, one thing to just keep in mind, the RSI is bearish right now, making lower highs as well as lower lows, and MACD actually did cross with the 12 EMA below the 26 and below that zero line. Still primary uptrend, but it has some work to do here in the near term, next 2 weeks, in order to try to reclaim some of these key levels to the upside.
A stock worth watching. In wrapping up, Nvidia is a fascinating study of a company caught in the crosshairs of extraordinary success and regulatory scrutiny. Its stake in the AI chip market, commanding an enviable 80% market share, underscores its dominant position. While the allegations of data scraping and the intense regulatory scrutiny pose significant challenges, they are but one chapter in a larger narrative of technological prowess and market leadership. For potential investors, Nvidia offers a compelling mix of high reward and calculated risk. The stock has displayed resilience in the face of regulatory probes and stands as a symbol of innovation in the AI industry. As global industries increasingly lean on AI for competitive advantages, the demand for Nvidia's offerings is poised for sustainable growth. Nvidia is firmly positioned at the confluence of innovation and market leadership, making it a prime candidate for any diversified investment portfolio. Given its strategic responses to current challenges and the promise of future advancements, Nvidia's trajectory appears poised for new heights. What are your thoughts on Nvidia's journey? Are the regulatory challenges a cause for concern or merely a bump in the road for this tech behemoth? Share your views and join the conversation on one of the most intriguing stocks in the market today. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.